detailed agenda.
Yeah, so, baby, what motivated you? Hello?
All right, so for some reason, I got to switch over. The sound's not coming in the headphones. I'm like, why am I wearing these headphones?
Hey, Theo, what time is it over there? What do you got, like midnight?
It's no, it's 1:33. Yeah, I've been staying up late. It's summertime, and I am able to work a lot from home, so I have a good excuse to stay up.
Cool.
And my kids are not my kids are at home. You know, they're on summer holiday.
Oh, we got a newbie, Nick.
So, hi, Nick.
Chris Wayne.
Hi, how are you guys?
Legal news, social media,
I'm
comedy,
preparing.
experts.
I'm preparing some charts. I've got a few charts.
Sweet.
And, you know,
but I thought this was uncharted territory.
It is uncharted.
Well, you're a little bit
Actually,
correct
why are you getting that
because
What's that?
Theo,
a chart is.
Are you in the? Where am I in your? Which pole position am I? Top right.
Excuse me. Oh, you're in the
my
upper
top right
right-hand corner. Mine too.
Okay, so I'm sorry, you're talking about charts?
Yeah, I have some. I was just going to say that, you're the host. You can lead the discussion. I'm looking for it on Twitter currently. There was an article, Starbucks employees told to be kind to customers after market rout.
Really? Why? They're afraid they'll go postal on their caffeine?
I don't know. I think that, I guess I don't know what city. To be honest, I haven't read the article. One of those standard social media things where you retweet and you haven't read the whole article. But, you know what I mean? But, yeah, right. But it's just a cool idea. I think that, probably in most cities, they realize, okay, that was a pretty big crash. And, be extra gentle with people today, I think, was the kind of thing. I guess I didn't want anyone, I don't know how to joke about it in a nice way. I guess, most Starbucks are not really high up. Let's just put it that way. So I guess they didn't have that problem.
Oh, I see.
You see what I mean? But
yeah.
Maybe they were just worried that, they don't want anyone to freak out or whatever. So they were told to be extra. So it was such a dramatic Monday where employees at Starbucks were told to be nice. That's a pretty big deal.
So you're basically saying that was the fallout.
You could put it like that now.
Or the potential fallout.
Now today, I don't know, Nick. Hi, how's it going? Do you have anything to talk about today?
No, actually, I was just thrilled to see a topic other than social media or live streaming, and I thought, I've been watching the markets the last week, and
Lourdes loves you.
Thank you, Lourdes. Much appreciated. Maybe she felt the same way about the only topics you could find on here were social media and live streaming. So, actually, just the funny thing is I looked at the markets when they were up earlier today, and then when I took a late lunch, I noticed that they had dropped again. And so I thought I'd come in and see what sounded like you guys had some information on it.
Right. Well, I wanted to back up a little bit just to 2015, not too far, but where I think that we could say something's up, something is afoot. So just look at this thing I'm about to put in the chat, and tell me if that doesn't look weird. Now, what that is the euro and Swiss franc pair. Now, what happened in one day? It ruined a lot of people because the Swiss central bank came out with a surprise announcement that, to explain it in a simple way, well, they're just not going to buy euros anymore, and they kind of want to get out. Okay, so that what they were doing is they were kind of artificially holding up the price by buying some, and they were like, well, we've decided we're not going to do that. And it was a sudden announcement, and that movement shut down a lot of brokers, and a lot of people got really hurt on that, because even if you had a stop loss, and I can explain what that is another time, but probably heard of it. If you already had an order in, right? If you say sell if I'm minus 10% or I don't know what,
right.
Even if you had that, there's no 100% guarantee, and a lot of people even with those got smashed. So what this means when you see a movement, okay, like a rubber band or a guitar string, when you hit it, and there's like that vibration, and that's kind of like, in my opinion, that is kind of like, I mean, everyone was like,
would you like me to demonstrate? Or
right? But you see on YouTube like dollars collapsing, whatever. Oh, and you can see these from like 5 years ago and all that kind of stuff. And nobody knows when that's going to happen. It's ridiculous. You can never tell when, but you can see. But when you see something like that, then you can say, okay, something is up. Now I don't know when. So I think that was the start of the big things going on in 2015, and then after that, more and more stuff about Greece started coming out, and that's what's kind of led this whole. Now, Will isn't here from China, but China is a gigantic economy, of course, right. And that also is pushing this whole thing. But I think that the reason I wanted to just show that again is because that's what really, the Swiss are not stupid, okay? And they were like, we're getting out of here. We don't want anything to do with this Euro mess. We already know. Now, think about what they know about, like, what the situation in Greece and the economies. And they're, like, talking to each other in their private meeting. They're like, guys, no, we're out. Sorry. This is ridiculous. So anyway, I don't know. That's what I just wanted to point out first. Now, I don't know if was that even a big deal. Do you guys even remember that? I mean, it was a bigger deal. I'm in Germany. It was a pretty big deal here when that happened. I don't know if it was a big deal in America or something, if it was really reported that much.
I can't say that I recall it. Do you, Keith?
No, I don't really watch the financial news to that detail. I don't know if it even made it in the major news here, if not just a little soundbite one day.
Yeah.
Right.
Yeah.
Right. Okay, so Will isn't here, but I'm just going to go over quickly what I wanted to say about China. It won't take too long, so don't.
Well, how about I have a suggestion.
I'm going to back out to give some other folks a try to jump in here. I wanted to say hi. Thanks for putting up a good topic, and I'm going to listen for a while.
Cool.
Finish up
thanks.
some work. Talk to you guys.
Okay, So what I'd like to do is I definitely, Theo, want to hear what you have to say. I've been looking forward all day to getting your viewpoint on this. So basically what I'm doing is getting some sound bites for my podcast for Thursday. And what I wanted to do is cover the economic events occurring this week, later last week and this week with China. And the thing that I wanted to make a point about is it's like market volatility. The more volatile it is, the less predictable it is. And if you can't predict it, then you can't follow a trend, then you can't accurately buy or sell and make money. So you're exposing yourself to losses. And then, like I read Tony Robbins' Money Master the Game, and they gave you some really good advice. Most of it was a pep talk on how to live within your means and save your money and be conscious of that stuff, right? But then towards the end, they talked about the Ray Dalio's all-weather portfolio, and I'm kind of skeptical on that. And so after I finished reading the book, I came to the conclusion that great advice about behavioral habits and things of having the right attitude about saving and not living outside your means and thinking about your future and all that, which is Tony Robbins' strength. But I did not leave the book with a good knowledge of how to invest money. And I wanted to invest money because I had the pep talk, but I completely lacked any knowledge on the ability to invest correctly in an asymmetric portfolio where I have a more likely chance of gaining than losing. So I anyhow, so I got money in the market and I'm just losing a butt ton. I got in January. I didn't get to ride the upswing since 2009. So I know a lot of people say, oh, it just wiped out the last 2.5 years of profits. Well, yeah, if you got in 5-7 years ago, but I got in January and I'd lost like 15-20% of my money. So I'm kind of upset, but it is what it is, right? So
yeah.
And Nassim Taleb talks about the black swan, where these singular events cause major things to happen and they're unforeseen. And so you can't really predict these, but when they do occur, they make major change, like in markets and in the world. And the other Nassim Taleb point I wanted to make was oh shucks, I just lost my thought here.
Well, the black swan is important. Black swan is really important. If you've never heard about that, some people need to look that up. There's a lot of info. It's a very important concept.
All right, I totally agree. Oh, the other one is that a lot of people think that they're good at making money. And if you can imagine, the bell curve where everyone in the middle, they lose and they make as much money. They lose as much money as they make, so they break even. That's the peak of the bell curve. And then you got the ends that feather down where a small amount of people make a ton of money and then a small amount just lose a ton of money. Well, the people that lose, they think they just suck at it. And the people that get all that money, they think they're really good at trading stocks and they think they really know markets well, when in fact they were just lucky. Like, how many people truly know what they're doing and can really predict the stock market and the other markets? And I have a thesis to propose, is that the more people try and read and predict the market and make these trades, the more volatile and unpredictable the market actually becomes. So on that note, I wanted to lead into the two things that we discussed yesterday. One of them was somebody had mentioned that a lot of people in China were earning as much money, they were investing as much money as they could earn, and they were doing as quickly as possible with these apps on their smartphones. So in other words, the Chinese stock market was getting pumped up with a lot of everybody's money, from the big ticket rich guys all the way down to minimum wage earners. And then the other one was the point we made about how there's malls and buildings and infrastructure built, but nobody occupying it. It's like the government tried to push to sustain the double-digit growth over a couple of decades, and that it's like pumped up full of hot air and there's no tangible sustainability there. And so I think the combination of those two is causing a collapse in the Chinese economy. Now with that, I'm going to let you, Theo, take it away, because I consider you like an expert in finance and maybe Chinese matters of economics and policy. So take it away.
Okay, well, thanks a lot. I wouldn't go so far as say that I'm an expert in Chinese things, but what I have posted in the chat, which the listeners, if you're just listening, you won't be able to see, but it's okay. I'll just describe it. And I've put extra connotations there to describe what's going on, because, what the charts can show you is they can show you the psychology and the emotions that are going on. I mean, you can just see it there. So, there comes a point where, now Will was telling us that later. It would be good if he comes on. He's in China. He can tell us about when he was hearing about everyone using apps, the casual person to trade, is so around March and April, the Shanghai index was really taking off, and, it goes to a point, and then there's probably, let's say, I guess here or in America, and the radio would be like, oh, everyone's making money. The stock market growth, great. Everyone get on. So the message is indirectly, everyone get on this train. It's going up, right? And so it goes up, and then and some people decided to invest or to start trading, and then there's a point where it gets ridiculous, and then it's more like, then the sentiment is more like this: hey, I heard a bunch of people were making money about a month ago. They were buying stocks. Shouldn't I get into that? Oh yeah, now I'm going to get into it. So this is the thing that, like you said, I don't really know much about, trading. And if you have casual people trading that have no idea what they're doing, well, they're probably going to lose. I mean, that's me.
How
it is. Yeah. Yeah, okay. I mean, we can discuss, the difference between day trading and I don't know, buying stocks that pay off dividends and so on. I mean, it's a whole nother game. But overall, the sentiment when it gets to a certain point, it keeps going, and the retail traders they're gonna get the message. Oh, yeah, I can make money at home, right? I can just trade. The Shanghai index is going to go up. And not only that, it's even crazier in China because they're getting clearly the message the government is just going to buy this thing if it goes down. It's not hidden, that they're going to get a support. So then what happened was, now if the Shanghai index went down due to Greece, I doubt it. Not fundamentally, but little things like that, like trouble in the Eurozone, are always a good excuse to kick off a sell-off. It's good to have an excuse to start a sell-off. And that's what you had. You had a corresponding around the peak of the Greek crisis, you could say, the deadline after deadline, and it was getting to this referendum they had, were some really heavy sell-offs of the Shanghai index. So also very curious, which is interesting. I mean, I put on the chart also the 200 moving average. It's a day. Every candle on that chart, every little square represents 1 day of trading. And so this line there is a moving average. So it's recalculated. It's an average that's recalculated, flowing average you could even think of. And
so you have two charts here. What was the first one, and then what's the second, or the second and then the third?
Okay, the third one is the China one. That's what you should be looking at now.
Okay.
And it's the last one I did. And I'll go back. The very first one was the Swiss franc and the euro, where there's like that kind of like heartbeat, looks like a heartbeat almost if you look at it.
Right.
And the other one was S&P. I'll get back to that, but you want to talk about China, I'll go ahead and say what I want to say.
Just to let the listeners know that these charts are going to be posted on my website, because I have a podcast section on my website, and I can post as many graphics as necessary. So we're going to, with your permission, of course.
Of course. So, and then so what I wanted to say is that, me and some other guys that I know that, we're looking at a lot of this stuff. One of them said, hey, looks like the 200 moving average, that's where the government is buying in because to support to stop the crashing, because there are these really curious heavy buying going on around that point. Now, that might not be true. That could also be, investors buying then. Okay, another interesting fact that I found out about during this whole thing this year is that in China, it's possible, now I don't know the details of the law and the regulations, but it's possible if you're a company traded on that index that you can halt trading just for your stock. So it could have fallen a lot harder, but some of the companies were able to stop trading. It's kind of like a weird rule, like you're not supposed to, but you can, or there's some kind of limits or something or whatever. But it's
so that means all the stocks that I have in my portfolio, I can say stop trading and they won't fall anymore.
That would be cool, wouldn't it? What if the CEO was like, "Oh, just stop trading that today because they're just going to sell this off, and I got to sell mine off first." So, get, and nice. I think I heard there's a lot of noise going around about people getting penalties for shorting. So short selling is when you profit from the price going down. Essentially, in some ways hi, Mark. In some ways, you're just borrowing money or borrowing shares in order to sell them. And then when you buy them back at a cheaper price, you're paying back the person you loaned them from plus a fee. But essentially all you're doing is profiting from falling prices. But we can get into that anyway. But then it just recently the price just totally fell, just free fall, because that's what I wrote on the chart where it says major gaps. So you see those candles where there's a space between each candle. That is really, really crazy price movement. So that means the period of one day happened, and then there was so much selling that when the next period started, there was a gap. Okay, so that's
so
I mean, you can, yeah. Mm-hmm.
It's so from my understanding, so the listeners can get an idea, just check out the chart on my website. But the candlestick chart is basically a chart used for charting stock movement. It could be an individual stock, or it could be a whole market or an index. But now these candles, it's like, so what I interpret this as is the market opened, the stuff fell like a rock, and then it closed. And then the next day it opened again, but it opened much lower than where it stopped falling the day before. So it's almost like overnight it was falling further, but that doesn't show up on the chart. Is that roughly accurate?
Because these markets are not 24/7. And so the orders pile up and it opens at a lower price. That's essentially what happens. So yeah, it's on there. So also for anyone, I would just suggest looking up on Google candlestick. It's a pretty interesting way to look at a chart instead of a line. It's a little bit more descriptive than a line. You can tell a lot more than what's going on now. And I've also talked to people about using that for other data. I think it's an interesting way to look at any data, actually. But going back to China.
So the candlestick chart, not only does it have where it opened and closed, it has its high and low, right?
Yeah, it does. It has open, close, high, low, and it also has so-called wicks or shadows, which is why it's called a candlestick chart, because sometimes there's this little line at the top of this rectangle and it looks like a candle. So that is where the price was, but then it ended up closing there. Or on the bottom, you can get that little line too. So it went up there, but then, I mean, you can have a 1 minute candle. So in the span of 60 seconds, the price went all the way up here, but then it went closed at the end of the minute here. So there would be a little line right there. That would be the best way I can explain. I suggest you just look it up on Wiki or something. There's some pretty good articles, so you know. It might sound complicated, but it's not. And I think it's just good that people know what that is.
And I also recommend that the listeners go out and get some apps for your computer, your smartphone. I have an app on my smartphone, and I can check stocks. I mean, it's a standard 15. It's called Stock Spy. I'm not promoting them. I got the free version, but you can see that it'll have stocks and then where they're at, if they're red or green, and then you can actually go into charts and stuff. So you get these like the candlestick charts. It's probably hard to see, but there's a lot of apps for phones, tablets, and computers where you can track your stocks, your portfolio. So it's handy.
Yeah, Mark's right. I mean, of course, there's the bid and the ask in the order book. Yeah, that's for more, that's more important when you're, deciding on a trade, on a day trade or any trade actually. But yeah, that's also another aspect, the bid and the ask and the order book. Also, I hear that Robinhood is a really good app and has gotten a lot of, praise from people here on Blab. Actually, I was surprised. And in general, so Robinhood, really cheap fees or no fees or something. I guess they make money on the spread. I'm not sure, but it's disrupting the trading industry a little bit, this app called Robinhood.
Really?
So, yeah. So check that out if you're interested in that kind of stuff.
That's a good tip. Thanks a lot for that, Theo. Appreciate it.
Sure. Yeah, Robinhood is pretty good. So I've heard a lot of good things. So I wish Will would come on to tell us more about, what he saw on the ground about, your average person trading. Now, I mean, there's nothing wrong with people trading on an app, but the problem is that when they get the message that they can just make a bunch of money. So anytime that it just goes to show, anytime that someone tells you that it's really easy to make a bunch of money, they're probably wrong. Right. So
that's a good point. So let's look at that for just a second. So here's human behavior. Now, I really believe that, when you go to school, when I went and took economics classes in college, they basically lead you to believe that there are markets and forces and supply and demand and production and resources, all this stuff, right? But what it really comes down to, yes, there's supply. I mean, if something's in short supply, like energy, oil, fossil fuels, then the price will go up if the demand is high. But I think it's just predominantly a behaviorally driven thing, right? Especially like bubbles and things. For example, the bubble that occurred with the housing and the mortgage-backed securities and whatnot, that was a frenzy to buy real estate. And then the dot-com bubble was a frenzy to buy dot-coms. Do you remember tech companies back in the day? Do you remember did you hear the tulip bubble way back in Europe?
Oh, yeah.
It's like last century. Yeah, that's the classical.
I'm into Bitcoin. Everyone says Bitcoin is like the tulips, so of course. Markets. Who is in the market? Humans.
They're humans. They make decisions to buy, right?
We make really illogical decisions normally, and so that's why markets are illogical. That's the simple definition, and why I think a lot of this stuff happens. That's why, that's why I wanted to write on those charts. I have those little comments. Hope. Everyone's making money here. And then when it goes down, anger, fear, because that's what's really going on. And that's what you can see, in that chart. There's just this massive sell-off.
Theo, could you do me the favor, and I would really appreciate if you could take as long as you need, over the weekend or whatever, but if you could write those things on the chart, because I would be absolutely fascinated. That's the stuff that really gets me excited learning about this.
I wrote them on these charts: fear, anger, and all that on the last two that I posted. And I didn't do that on the Swiss one, but I did put, there's like these little annotations.
Oh yes, everyone is making money.
Yeah, exactly.
Major caps. Very
and
cool.
see on the China one where the 200 moving average is, it says government is buying here. Because they probably just took some arbitrary line and were like, okay, well that looks like a good place to support this. All right, yeah, we got to do it, because you can see all this massive buying on that line. I don't know if it's true if the government was buying there, but it's just a, way to kind of, or maybe think people perceived that the government was buying there, so they bought there. See, that's also the thing. As long as people perceive that is happening, well, then it doesn't matter if it really is happening. It's just perception. Perception is the price. So, okay, well, let's just talk about briefly what happened with the S&P the last 2 days, and then I'll maybe someone else wants to come on and talk about something else or something. And I will post another chart. And I'm basing this mostly on charts because I think they show pretty interesting things. Okay, so this chart,
another chart.
Yeah, so this chart is S&P. The last 2 days. So we know, people were already calling it Black Monday, right? Now, the yellow lines are just days. Now, this is also including the so-called cable. So it's even when the market wasn't officially open, but that was a big part of the sell-off too. Now, you see this, and the time at the bottom, unfortunately, is my time here in Germany. So it could be a little confusing. I didn't have time to couldn't figure out how to change that for now. But anyway, you see where that little red arrow is? That and there's that one candle. Well, you see that big line under the candle? That's a massive wick. Okay, that's the Black Monday wick. This chart is an hour chart to kind of give us an intraday look of things. Each candle represents 1 hour. And that wick is that, wick of death. That's the Black Monday wick right there. Now, the price did recover. And
before it closed?
Before, they say that, and they say it, and it did happen both days now, that there was a good sell-off at the close. So it did recover. People bought the dip, or people had orders lower and were buying more. And, and then there was another sell-off at the close. Now today there was a big recovery. I think I saw a message going around on Twitter that it was. Oh, that's a good question. I'll try to get to that. But then you know what happened? There was this 1 hour where I wrote the anger, WTF, why, crap. That's this one candle, this 1 hour of selling at the close today.
You got to wonder what motivated that, right?
Well, you could go into a lot of, I mean, if I look at this in a real, I would say, well, of course, there's going to be some buying after that big sell-off. You know what I mean? Okay, right. and go long on leverage. I got a really low, buy the dip. Some people bought the dip, they'll ride that, and then they're going to sell. They're going to dump it, and they did it. They did. I mean, this thing has broken major support levels, so I don't see how technically it's bullish. Now there could be a lot of things coming. It looks. This is okay. The reason that it looks bad also is because there's a lot of talk. It's combined with the fundamental things, like a lot of the talk that they think that Janet Yellen over at the Fed is not going to raise interest rates because look at that chart. It has to be flying high. But why is it flying high to begin with? Because interest rates are low. Well, that's one big reason, So anyway, I think that's an interesting chart to look at. And I encourage people, even if you're not trading, just to kind of take a look at these candlestick charts to see how they work. Because they do show each candle is a little story of a period of time. And I think it's a good way to see what's going on. And, now you said something about nobody's good at predicting the future. Nobody can predict the future. I think that there's different ways to look at it. And I don't know, what would you say? Tony Robbins, is that what it was? The book you read?
Yeah, Tony Robbins, and the book is Money Master the Game for lay people like me.
Oh, I'll have to check that out. I haven't took it, but I just wanted to say that there's a few different schools of thought about just trading on a technical level. That means just looking at this chart and saying, okay, this looks good and this doesn't look good to buy or sell. And that is, instead of being predictive, you're reactive. Reactive sounds like you're slow, but you're looking at past information. And based on that past information, you are reacting. Now, you could try to say, okay, I'm, it looks like it's going to head up from the past information. So, I am predicting that. Okay, I am predicting in a way, but, it's a different way to look at it, in my opinion. Hi, Mark.
Well, hey, Mark, how's it going? If I could interject very briefly. So I come from an engineering perspective, and if we see signal patterns that are historic and we don't know what the future signal pattern is, they say the past is the best predictor of future performance, right? Or behavior. So if that's the only thing we have to go on, we'll look at past trends, and then we'll through like a homology methodology, we'll look at the past and try and trend it. So when it did X in the past, it did Y, right? So now it's doing X again, sort of. So it's going to do Y, sort of, right? So that's why a lot of times we look at, past behavior to try and project into the future. But like you say, we have very limited information. Goes in tight, Mark.
That's there are so many things wrong with that.
Good. This is awesome. All right.
Okay, great.
Let's get it.
Okay. The reason I popped in is because actually I'm the author of Predictive Innovation.
Oops, your audio's low. I'm having a hard time hearing you.
Okay.
That's better.
Is this actually?
Yes. Can hear it now.
Okay. I didn't realize this microphone was the microphone. Okay. I'll just do this a little bit. That'll get that up a little closer, I think.
Cool.
Okay. So now I'm author of Predictive Innovation. Now, innovation is different from what you guys are talking about, but the principles of predicting still apply. Okay. Now, you said it's something really interesting. You're saying trends and using what's happened in the past and you think that it's doing the same thing, so the same thing's happening, so you think the same result will occur.
Not guaranteed, but possibly, right?
Right, unless you know what actually caused the previous thing. And
True.
I will give you an example of something to look. Now, I perfectly predicted stock prices for a while. I was making a crap load of money.
Nice.
And I'll explain how I did it. But let me give you an analogy, okay? The sun has risen pretty much every day you've ever been alive, right? Now,
True.
it shows up and you can see it. Well, I can tell you 1,000 years in advance a day that it won't. Okay? And the reason is I know why it won't appear in the sky and what causes it, and that's called an eclipse. Okay? So if you understand the mechanism of what's causing these effects, then it's no longer, these guessing games. It's rock solid. Okay? So I will now say how I actually predicted very accurately, actually not very accurately, perfectly accurately, how the prices of some tech stocks. When I was in Silicon Valley, I'm a consultant, and I was in Silicon Valley, so I was in a lot of different companies. And all these big companies, this is the 90s, all these big companies, go ahead. There's going to be a saw going off here in a moment, so let's do that for a second. So all these companies, lots of employees, and they all had stock in the company, either stock options or stock.
Is that the saw?
Yes, that's the saw. Okay, so also California Silicon Valley is in 3 hours behind New York. Okay, so if a stock would open and trade in New York, and let's say it traded up in New York, 9 a.m. and people in California, Silicon Valley tend to not come in that early, is noon, when all the traders in New York are at lunch. Okay, so these people come into work, log into their computers. First thing they do, they check their email and they look at their shares. And if they're up, they will sell their options, which will cause it to go down for a brief amount of time. Now, I could time this perfectly, come in, look to see if it was enough of an up or down, and react the opposite, whichever way I wanted. And there would be events like this every week. It didn't happen all the time because we wouldn't have something up or down, but I knew why it would go down just after lunch or up just after lunch for these certain kinds of stocks, because I knew what was causing it. Okay?
All right, so you took advantage of that behavior, that specific behavior.
Right.
Nice.
Yeah. So I'd, make $5,000 every week, and about every week, and just call it good.
Well, that's great. Well, yeah, that sounds, you have that a little bit. You have market open. So you've got, Asia, you got the London Open, well, you got the German Open, then you got the London Open, you got the New York Open. Now, depending on how Asia behaves, London might behave a certain way. And, London actually sets the tone for like a lot of the Forex markets, even for when New York opens. But what you will see is what you described. So let's say that, that the euro has been sold off the whole day. Okay. And then New York opens, and then it will go up a little bit, and then it might just continue down the trend. But you'll see this, where the people thought, okay, I'm going to buy in here. A bunch of people bought in, and then it would continue. That sounds like it doesn't make sense, but you see behavior like that because the smart money sold it, kept on selling it off, while the retail bought it. You see what I mean? A little bit. Anyway, I can show you some charts and we can map out this. I think that you'll find it interesting, these opens, because that's similar. Yeah, that's
So
true.
it sounds like you observed a specific behavior at a certain time, and it was predictable, right?
Exactly.
Okay.
Yeah,
And it
Sean
wasn't
is
just
saying.
that I observed it and it was a trend and I just bet on the trend. I knew why it was doing it.
Well,
It wasn't that I had a trend and said, "Oh, this happens all over and over again." I
know.
knew the cause. Just it's the important part. I knew the cause.
Yeah, so you were predicting the behavior because you were predicting they were going to take profit on their share options, basically, and you saw it happen before, and it happened again and again. So Mark asks, why didn't you make more than 5K a week? Seems like you'd make more in that arbitrage opportunity, right? Well, that depends on a lot of things, but yeah, Mark.
Yeah, the situations only occurred so often, right? So, and I was unwilling to. Actually, I didn't even have an account that I could bet more money than I owned.
Okay, margin.
I didn't have a margin account at the time, so I couldn't do that. So I only had enough money to do that much where I would get a profit of $5,000 a week.
So when people join in here, can they look at the charts you posted, even though they joined in after you posted the chart?
Yeah, but I can post it again.
Because Shadow was asking what happened with the dip and all that. So basically, for the people that are just joining, we're just talking about. I wanted to talk about this recent stock market, financial market occurrences, and maybe a little bit of why these things happened. And so I thought we'd get some people who knew stuff about finance to talk about. That's why I sent out the APB. Theo's got some cool charts.
Okay, yeah, those are the first two. Now I have to find the link to the Swiss one, but we can. That's not so current, but I think that's what kicked off a lot of this 2015 when I think about it.
So let me ask you this question. So if you think that what was that? The franc? Let me see. Pull up that chart. I'm going to pull up that chart again. So the euro. So then the Swiss, the euro. I guess the Swiss franc. The Swiss are divesting from the euro. Is that what happened?
In other words, yeah, the central bank was finished buying euros, basically. Let's just put it that way. So
okay, and then now they're talking about kicking Greece out of the Eurozone because of their financial problems. But then you've got Spain and Ireland and a couple other countries that don't have quite the best economics. And there's some non-sustainability going on in the Euro area of the world because they have a lot of entitlements they're paying out, a lot of non-sustainable government funded entitlements that I think the House of Cards is going to collapse, and it's going to be one of those kind of collapses where you don't recover.
It could. Now, okay, let's put that in a little bit of perspective. There's two things that I think are interesting. One is European Central Bank. So European Central Bank, the president is Mario Draghi from Italy, and he has said more than one time. Now you know how people analyze these people's what they say, the like Yellen or someone to. He's basically said, in other words, they're willing to use extraordinary measures in order to, I don't know, maintain stability, or I don't know, whatever kind of words he uses at what time. I don't have a quote right in the sense, but basically it means they're willing to bring out the big guns, economic big guns, to hold this thing together. So they can print money, they can lower interest rates. They got interest rates at very low. I think, 0.01, excuse me. And intrabank Well, it's a not actually interbank. It's if the bank wants to send their money to the ECB to hold overnight, they're going to have to pay negative interest. Okay, so put that through your head, negative interest. So what that means is that instead of, giving your bank money, the bank giving their money to another bank to hold overnight, so they earn a tiny bit of interest, which is really a lot because they have a lot of capital. They're saying, if you do that, you got to pay. So what are you going to do? You're going to invest in stuff, and you're going to take. And what do you do when you invest in stuff? You take more risk, correct?
Mm.
So we have got what I like to call the limbo. Not that we're in limbo, but like the game limbo. So in the game limbo, there's a
You keep lowering the bar.
You keep lowering the bar. The bar is the interest rate. Okay. And in the Eurozone, the interest rate is at 0.1%. So it's near the ground. Now, the economy is still able to walk under the limbo bar, but the problem is it's overextended. The governments trying to hold this all together are becoming more and more overextended. Now, they have a lot of power. They still have a lot of, you could say they have a lot of ammunition still, a lot of tricks, a lot of things they could do. But they're so overextended. So now let's go back to the black swan. What do you think is going to happen if something unexpected happens and you're all like this trying to go under the limbo bar? You see what I mean? So that's the kind of situation that I see EU and US, frankly, in that the limbo bar, you can bend the markets to a certain point, and normally it's okay. But when you bend it so much, and then something happens unexpected, that's when things get a little out of hand. So let's go through some of the questions. Earlier we had, I think we had Lourdes. Sorry if I mispronounced your name. I forgot. Asked what we think or what I think of how the consumer confidence is calculated. Now, honestly, I don't know the. Okay, great. I'm glad that's right. I don't know exactly how it's calculated off the top of my head. I mean, personally, economic confidence model. I'm highly skeptical of a lot of this by Martin Armstrong. Okay, I'll have to check that out. I'm going to have to check it out. I cannot say. I'm usually really skeptical of all this. Now, what will happen is, of course, daily there are different reports coming out, and the market usually reacts a little bit one way or the other when these new stats are released. So that's one aspect. So really, it doesn't matter if it's accurate. It just matters that it's perceived that it's accurate. It just matters that it's perceived to have value. It doesn't matter if it really works.
What do you think of the volatility index?
Well, as you noted, I will pull that up. I was just because you said when things get volatile, you don't know what direction it's going. Well, so what happened is a friend of mine, George, pointed out 2 days ago. He said, "Look at the VIX," and I looked at it and I thought, "Oh man, this is crazy." And he says, and I think he's right, that when it gets really crazy like that, everything is moving in one direction. A lot of things are just starting to move. It is trending actually when the VIX goes really stupid like that, really, really crazy. And you see it right now. A lot of things are going down. Even commodities are going down. It's not like gold is going up and the stocks are going down. Silver is dumping. They're just dumping everything, So it's getting a little crazy if you think about it. Now, let's see. It's only been a few days since it's got really, really heavy sell-offs. Let's see what happens. The economic confidence model isn't Mark says in chat. The economic confidence model is an economic cycle theory by Martin A. Armstrong that proposes economic waves occur every 8.6 years. Okay. The end of each cycle is a crisis after which the economic climate improves until the next crisis point. I think that's has some merit to it, definitely. Now, if you, I think I call it the bubble cycle. It depends on what you want to call it.
Sure, because there's always some sort of trend going on, whether it's a .com or a real estate or a Chinese bull growth pushed by the government. Oops, we ran out of steam. The cake is falling in the oven. And it just happens to be every 6 to 8 years, right?
Yeah, I mean, there could be some merit to that. Now, like I said, I haven't analyzed that theory heavily. But I mean, people talk about, the bubble wave, bubble theory. It's and there's different ones. There's one theory where it's like, okay, this, and then even a bigger bubble, and then it goes down again, and then there's even a bigger bubble after that. Okay, so that's like a 3 bubble. There's all kinds of different theories about that. There are ways to calculate that cycle and events that can break it. Exactly, Mark. So you would have to really check that now. Yeah, is Will here? Let's see. I don't see him. Well, if he's around, he can come in and tell us about China. Okay, so does anyone have a question or comment or some more input? I mean, we're just, in my opinion, I don't see it. I don't see the S&P and the Dow looking really good. Now, like I said, I still think what if there's a big buying spree tomorrow? Could be.
See, that's the problem. That's an excellent point, Theo, because, all right, so this is here. Let's talk. Basically, let me just tell everybody that what I'm doing here today is I'm recording sound bites for my, it's called the Super Smart Guy podcast for my Thursday episode. I wanted to get some sound bites that I could roll in to a show that I put on Mondays and Thursdays it's a podcast. So I'm going to edit this down to probably 20 minutes to a half an hour, but I'm going to get the highlights and then I'm going to put them in. But basically I want to discuss the economic market trends that have occurred last week and this week regarding the Chinese financial market and how it's having a ripple effect around the world. And so getting back to what we were just talking about is that, so here's the trap. The trap is people see the stock market going in free fall and then they sell, right? And they're selling low. But then here's the problem. Is it going to turn around the very next day, like the deep V? In the deep V, it'll spike downward and it'll come right back up very quickly. And that is really crappy for if you sell at the bottom of the V. And that's that volatility I was talking about earlier. It's like, but see, Murphy's Law, if you don't sell, it's going to keep going down and it's going to be like not just a little minor correction. It's going to be like a recession or a depression or a total stock market crash. Yeah. So it's like you're damned if you do and you're damned if you don't.
Yeah, that's true. I mean, I don't want to go in and recommend how to trade or something, but what I think there are some important things to think about. And as far as what you're talking about, and don't try to call tops and bottoms. Don't get caught in that. Okay.
Because you're trying to predict the future, right?
Well, it's not about that. It's just that the chances of you getting burned, trying to
time
say
the market,
that's the top or that's the bottom are very unlikely. Okay. You can
agreed.
There will be enough of a trade. There's enough of a trade that you don't have to catch the very bottom or the very top. Okay. You're still going to be, okay. Will is here. He can come in and tell us about China. Now,
sweet.
I wouldn't tell anyone to do that. Now, the other thing you were saying, yeah, I mean, well, what do you want to do typically? You want to buy low and sell high. You don't want to sell low and buy high, right? Wouldn't that make more sense?
Yeah.
Yeah.
Exactly. But that seems to be the trend that I've been taking lately.
Well, then do the exact opposite of what you've been doing. So do
a George Costanza. I'm going to do the opposite of everything I've ever done, and then I'll be like crazy successful.
If people are getting really euphoric about how high the price is going, then you know you're in a danger zone. Okay, it doesn't mean that's the top. It just means you know you're in a caution zone. Let's just say it like that. I mean, that's subjective, if everyone's in euphoria, but let's just put it like that. And then if everyone is totally bearish, then you're like, well, let's look at this. Let's see if this is gonna, if there's something to this, and if this is gonna turn around. You need to be doing the opposite of that, and probably, unless you have time to be on your app all day or whatever, probably in longer time frames. Now, I wouldn't get hammered down in time frames. Actually, time frames is just about, like I said, the amount of time you have, or the amount of time you're comfortable, trading on. I don't think it matters what time frame necessarily. But, probably it's a good idea to look at a bigger time frame and then say, if it's looking really bearish, say, okay, well, is this turned around now, or is it starting to turn around? Do I think this has a good possibility, or I think it's going to keep going down? And then just wait, be patient. That's about it, really. Now stocks are more complicated. You can get dividends. You can use them for collateral. That's a complicated game as far as that, depending on why you're doing it. So
we can just briefly discuss strategies here, which is you can day trade, which is rapidly buy and sell, or you can buy and hold. And then when you do buy or sell, you can buy and sell individual company stocks or commodities or bonds, or you can buy into indexes. There's a lot of different, like I belong to a company, a Vanguard, which has a variety of index funds. And that's really all that I've been doing lately is buying into Vanguard indices in my private account. And then with my 401k, I just kind of put it in the growth fund and a year or two ago and left it there. But like you said, I agree, buy and hold, try and ride out the storm. But there's something to be said about timing. And the bitch of it is that it's hard to, you said, predict the future and time when to buy, when to sell. And you had mentioned that if you try and time the market, you stand a great risk of losing money. But boy, if you time it right, you could make a fortune.
Yeah.
So
yeah,
I mean,
sure.
that's like
what I'm just trying to say is that, wait for a trend to develop. You don't have to say, okay, so let's just say, for example, look at that S&P chart. Yesterday, you could have, it's the saying, buy the dip. Okay. So we still think we're in a so-called bull market, whatever that means. We think the market is still going to go up. Okay. But, there is a pullback or a sell-off. And then there's the methodology, buy the dip. Now, this is a kind of funny slogan because that doesn't always work. But, I think probably some people bought the dip. Or another thing, what you should do, not what you should do. Another thing you could possibly do is, and that goes a little bit what Mark was saying is, put some orders in at lower prices where you think you're anticipating. Now, anticipating and predicting, I don't know if we could discuss if that's the same, but let's say, okay, so what if I had, I could say, well, I think that on Monday, the market is going to go down. Why don't I put some orders in, one at 5% under, one at 10% under, or one at 1% under, one at 2% under, one at 3% under, or $1 under, or whatever. My limit order is just sitting there waiting to get filled. It might not get filled. It might even bust through all of them and keep going down. But at least you see what I mean? But I've planned out where I'm comfortable buying. So you can do that ahead of time. And then the market moves naturally to your order, then you're filled. Okay. So that is also an okay way to do it. You don't have to buy at the market price, at the current, ask or bid. You don't have to do that. You can just set a limit order for buying or selling too. You could go ahead and put your sell order in. You know what I mean? And you could just wait until it gets filled. You know that, and that's an okay way to do it instead of just waiting and be like, oh, I don't know. You know, so think about that too. That's also a different way. And what I was saying, stacking the orders. It's one. Some people like to do that. Like I said, not just at one price. You know, what if I put one order in at 5, put one order in at 5.15, one order in at 6, and different ways to do it. You know what I mean? So you can spread it out, stack it up how you want. So there's just different ways to think about it. You don't have to just go market buy. Don't market buy. Smart money. Okay, let's put it like this. Smart money doesn't market buy. No FOMO. FOMO is fear of missing out. But in trading, FOMO, at least in the Bitcoin world, but I think traders get that too. FOMO means market buy. Market buy means, so let's just go over that really quick. Market buy is when I were to go to the market and I say, I want 1 kilo of bananas at whatever price you have it, give it to me now. So whatever the current price is, and people run to you and they fill your order, your bananas, and you pay the current, however much you needed to fill up your 1 kilo bucket. Okay. We'll go for the stock the same way. Now limit is different. Limit, I'm going up to the market. I'm holding a sign. I'm going to pay $1.50 for 1 kilo of bananas. Well, the current price is $1.52. So I'm going to have to wait until someone comes around is willing to sell me for $1.50. Okay. That's a limit order. Okay. So it's, you know, smart money doesn't market buy unless they're panicking, or it's a stop loss market stop loss order or something like that. Okay. So just think about
sell now
that.
because the floor just came out from under our feet.
The smart money loves market orders because they can make a little bit of money every time retail market stuff. Okay. So why not don't do it? You might need to market buy. Maybe you want to get filled really quick. Okay. But, you know, just think about planning out where you think it's going to move, according to however you think. And then, you know, you could also just say, I want to buy a lottery ticket, then put a bid really low. Maybe one day there'll be a gap at the opening and you'll get filled really at a cheap price. You could also think of it like that. It's how you want your methodology is your methodology. You know what I mean? So I think that that's just something I think people will need to think about, and they don't think about. And traders know they're like, oh, here comes retail. Look, it's retail. What are they doing? Buying here. This is silly. You can see it in the chart, you know. And then you see an institution come and they slam the price down right on top of them or something like that. I mean, you know, I don't know if you can't tell exactly if that's what's going on in the chart because you don't know exactly what's behind it, but you can basically tell that because of how someone was saying in the chat, you know, what are those indicators? Not a technical indicator like a moving average, but do they get humans to behave a certain way? Do they get people? Yes, they do, of course. So if I have 100 times or 1,000 times the amount of money you have, and I can move the market a little bit, then I could move the market in a way to get you to panic buy, market buy, like I was saying, and move it even more for me. I'm just manipulating the market. All markets are manipulated. You just have to accept that. Okay, even the banana
This is
market.
interesting. Do you think China's manipulating the market right now? Like, because you know they're hacking us. They have warehouses full of government-paid hackers to, infiltrate our security systems.
Chinese government openly is basically saying we're buying a bunch of stocks. So if I don't know what you want to call that, you can call that QE over the top. I don't know what you want to, I don't know what you want to. It's not really QE, but I don't know what you want to call that.
Let me rephrase my question. Do you think that there is a Chinese bubble and the market's in free fall and the government just can't save it?
Oh, I don't know if I think they could save it. Now, at what cost? Okay. And for how long? So this is my theory. and I think I did well, it's not my theory. I'm sure I borrowed this analogy from somebody somewhere, and I don't know who. So whoever you are, take credit. The markets are like a balloon filled with air. Okay? Not that it's a bubble, but just think of it as a balloon. Now, the government and the balloon is sitting on, normally, under normal circumstances, the balloon would be on water and it would roll around and do its thing. But if the government doesn't like how it's rolling, then the government will try to control it and they'll push it under the water a little bit, okay? And try to say, okay, stay put, stay put. So right now you have the case where all of these governments are like holding this balloon under the water. Now they have a lot of power too, and they have plenty of money, and they control the money supply. You know, they can generate more money. They can do the interest rate. They can do a lot of fine tuning. But if they let go, they don't want the balloon to pop out, because then something bad will happen. You see what I mean? When you hold that balloon under, then it just pops out of the water. Well, that's kind of like what happens when you put a lot of controls on the market, because the market, you can't stop. I mean, people could argue with me. I mean, it's difficult. Let's say it's difficult to stop a market. People are going to want to buy what they want to buy, and they're going to sell what they want to sell. Doesn't matter what it is, stocks, drugs, food, or whatever. You're just, look at drugs. They're illegal, but there's a huge market for it. How is that possible? You see what I mean? You can't stop a lot of economics. It just doesn't work. You can steer it, and you can try to kind of, you know, put it in a box, but when the thing is, when it's too much, then you're in that overextended, like you're going under the limbo bar. You know what I mean? Or you're pushing down this air balloon underwater, and at some point it's going to pop up and smash you in the face. And that's just the question. If you push it under too hard, okay, or too violently. That's why they don't lower the interest rates by a whole bunch at one time, because they're very gentle over time. You see what I mean? They don't just say, slam it down. That would be too crazy. So anyway, I think we've got some stuff in the chat here. And Lourdes says that psychologists should be part of the finance industry. They are. There are, you know, I'm sure in banks and stuff, there are, of course, you need to know market psychology. Now, if you're a real psychologist or not doesn't necessarily matter. You just learn how things are. Now, I will tell you, as far as psychology, that's very interesting, actually. I don't have the link, but you could do it after your podcast or after this Blab. Maybe we can find, I can try to look right now. There is a YouTube film, a short film, documentary. It's about an hour long. It's called Floored. I'll type, you know, like the floor, but ED. I'm
taking notes here.
Okay.
Got my journal.
Okay, good. So this little documentary is really cool. It's about floor traders that traded on a trading floor, so which is a dying art, basically. And there still are trading floors, like you see in the movies, where the guys are throwing all the papers around and yelling and screaming and giving each other all those signals, and they've got like two phones, and they're, you know, doing all that stuff. So, I mean, a lot of what those guys are doing is that the people are making an order for, let's say they want to buy 1 kilo of bananas. They get, the client says, I want to buy a kilo of bananas for $1.50, and they scream out, okay, I want to buy a kilo of bananas for $149.8, and they just get a little bit on that spread, basically. You see what I mean? So they're just a broker,
right?
But just to give people an idea where, you know, but they're also are just trading for themselves too. A lot of them, especially in that film.
So basically this model you're talking about is like the classic depiction of the stock market, where there's this big open space and people are yelling, buy, sell, they're holding a ticket up in the air. So and there's these monitors all over with current, I guess, prices and things of that nature.
It's called open outcry. Open outcry. It's also called a trading pit. trading floor or
Pit.
trading pit. Okay, so the reason it's called pit is because everyone's screaming at each other about the prices, about, I want to buy here, I want to buy there. So, okay, so this is an interesting thing. So as the trading floors closed, now there still are some open, but they're not very many in different markets. But as they closed and everything went to trading at a computer, whether that's a desktop or whatever, it doesn't matter. These guys, these traders on the trading floor, they couldn't do it. Most of them in the video, and they don't like it. They only knew how to trade on the trading floor. Now, a lot of them were even trading with their own money. They were just going on there and trading their own money. Some people worked, like I was saying, they're brokers or whatever, but a lot of them, these guys in the documentary, were trading with their own money, at least to start with. And what I wanted to say is it was all about psychology. A lot of it was all about psychology. They were saying they could just smell when the other guy, other people were wanting to buy, or the other people were panicking. They could they could smell panic in the air. They could, it was all about a little bit like poker, in some ways. So, hey, Ivan's back.
I don't know, is he there or is he here? I can never. It's like the Brady Bunch.
What do you have
There's
to
a
say?
Story.
Am I going into monologue mode, or are you going to save us?
I just jumped in. Just wanted to see if things are rocking.
Dress shirt and everything. Boy, they clean up nice, Ivan.
From ice cream to dress shirt.
You use one of those wipes on your.
No, I just wanted to jump in and see how things were going, and I saw the furor of excitement. And
So,
I'm getting a couple of
You're getting some love from Lourdes, and we're all getting love from
Lourdes.
Lourdes. She's our fan club. Thank you, Lourdes. You are greatly appreciated. Your enthusiasm fuels our motivation.
I'm surprised you guys are still rocking and rolling. No,
I know,
I'm about
right?
to kick off in 15 minutes on my little show.
Right, so I'm gonna have to sign off soon. So we'll let this go for another about 10 minutes. And Theo, I really appreciate your time. And I know you basically ran the show, and you were basically my guest. And maybe what I'll do is I'll have you on my podcast as a one-on-one, and we could talk about some really awesome stuff, like we did with Ivan, whose interview will be posting this coming Monday. So if you want to see Ivan interviewed on the Super Smart Guy podcast, you can subscribe to me in iTunes and Stitcher, or just go to my website, supersmartguy.com. But before we run out of time, I'm going to ask some very basic questions. So one of the reasons why I wanted you smart guys coming in is because I'm representing the layperson. I'm a jack of all trades, master of none. And what the Super Smart Guy podcast does is we look for experts like you guys, people who have that in-depth knowledge, that talent, and then I learn some things from you that we can share and make the lives of the tribe, the super smart people, make their lives better. And investment, see, because I do health, wealth, and relationships. Well, this is certainly falls into the health. The wealth bailiwick, because some people are losing a lot of money last week and this week. And hopefully they can, like you say, stay the course, weather the storm. Don't sell in the middle of that V dip and then miss out on the gains. But then again, we don't know if that's what's going to happen, right?
That's true. What I want. The thing is, no FOMO. You can always remember that. So FOMO is just like, I'm afraid that I'm going to sell it, or I'm afraid I'm not going to get in. Buy. No FOMO. Okay, people? That's the main thing you can take back. No FOMO.
Is a FOMO like a cheap mattress?
FOMO is fear of missing out. Okay, it's used in social media too. Like, oh, I want to do it too. I want to do it too. Yeah, and in trading, it's like the same. Like, in trading, FOMO is slang for chasing the price. Don't chase the price. You can anticipate the price. That's what I meant. Maybe place a limit order where you think it might go. You might get filled. You might not. Don't like, oh, it's gonna go. You need to have a plan. Okay, I'm gonna accept a loss at this much. Hey, Ivan. Hi, Ivan. Are you a day
I think
trader?
he was getting afraid of FOMO.
Emoticon of what you were
You
saying.
FOMOing. Okay.
I was just
Yeah.
FOMOing.
I don't even know. I don't know if that's like a Bitcoin thing. I mean, that it's big. It's
No, it's in the
everyone
tech
Bitcoin
startup
knows
community.
about.
It's
Okay,
a
FOMO
major
too?
term of art within the tech startup community. Yeah, absolutely.
How do you guys use it in the tech startup community more? Like I did?
It's more of the
FOMO?
in the angel and venture capital arena, especially angel investors, because basically
okay.
when
Like-
there's an awesome idea that if people will execute on it, it's going to be a unicorn company, essentially a $1 billion valuated company, and people want to get in. So if you're not one of the first ones to get in, you're not going to have that opportunity. So say, for example, I am investing in Piazza, for example, and I get my share with, say, we'll just throw out a number for $50,000. And then by the time it starts executing in a few months, it's then valued at, say, I don't know, let's say 50,000 for 10%. And then it's valued at 10x that in 3 months. Well, the next investor that's going to want to get that same 10% has to pay 10 times that amount because the valuation based on the customer, it's based on a lot of different factors. A lot of it's subjective, but it's that fear of missing out to get in early that creates that turmoil or tumult.
Exactly.
To get in.
That is interesting. So did you know I'm going to start a cheaper version? You know how Bitcoin's like very expensive and stuff? I'm going to start a cheaper version of Bitcoin. I'm going to call it the 2 Bitcoin.
Well, there already are, I think, thousands or over 1,000, but probably hundreds of active altcoins that are doing, I don't know, whatever they're doing. Not that I'm actually, interestingly enough, on Sunday, I'm having a guest from an app called Dogerain, and this is about Dogecoin, which is not Bitcoin, but it's an alternative cryptocurrency called Dogecoin, which is one of the most popular ones. I know I tried not to go on those kind of tangents here because people have hard enough understanding Bitcoin, nonetheless another. But Dogecoin is kind of a fun coin, a fun concept, and it's a little different. So I thought that's cool. There are billions and billions of these coins that are, I don't know, there's a lot of different, from an economic point of view, Bitcoin is limited and Dogecoin is not. There will always be more Dogecoin created as long as it's
So we
mined.
can have quantitative easing of Dogecoin.
Yeah, well, there's two economic theories actually. One theory says that the hard cap on a currency is bad, that doesn't work, that you need a money supply. Okay, so and the other one says, it's good to have a hard cap. That's kind of like gold. But so I've had discussions with both sides. They both have good points. So anyway, I just wanted to say I don't want to go take over this into some cryptocurrency tangent, but it's interesting. So Dogecoin Sunday at Blab. Now
Cool.
That is at 11 p.m. German time, which is 5 p.m. Eastern. And you can subscribe here on Blab. If you go to my profile, you can subscribe to it. Do it today. Take action.
Do it. Do it now.
Do it now. No, I wanted
Like
to give
Voldemort would say.
Okay, are we recording still? Okay.
We have not stopped recording.
Okay. Would you like me to do my social media live stream expert prep talk or something like that? Okay, ladies and gentlemen, I've got an ebook coming out and we're going to teach you how to be the best live streamer, become an authority in your niche today. Take action now. Don't be a wimp. Don't be a wimp. Sign up to my email list right now. Just put your email list right in there. You got to take action. Get on the stream. Now, live streams, right? Become an authority in your niche.
Up your game a little bit.
Yeah, I got to up my game, but I think I'm gonna. Yeah, I think so. But I'm gonna be releasing, a really serious product coming up soon. No, Blabmeister. Hey, that's a good idea, Blabmeister. No. Anyway, thanks for having me, Keith. It was a good. I know I talked a lot, but I hope that was okay. And
No, that
I
was
hope you liked the
fantastic.
charts.
So here's
Okay,
what I'm going to
great.
do. I'm going to post the full audio on my website, but the podcast is going to be highlights. It'll be probably a 20-minute to 30-minute highlight segment, but the entire unedited audio will be on my website. There'll be a link.
Great. Awesome.
Cool. Well, I appreciate. Now, this I didn't really have time to structure this as an interview, but now this has really inspired me. So Ivan got me hooked on this stupid Blab thing. It's addictive. I love it. Boom! I know, right? So what I'm going to be doing, I don't know what that is. FOMO. FOMO. So what I'm going to do is I think maybe once every week or two or whatever, I'm going to have like a show, a Super Smart Guy podcast on different topics. Like one might be health and fitness or nutrition. One might be on relationships and dating. And another one might be on wealth, would be either like what we talked today about stock markets.
How to use Tinder.
How to use Tinder, yeah. Swipe left, swipe right.
I was just joking. Just joking.
No,
And
how to
then-
use
okay.
that one.
Yeah.
What's that one that where a bunch of people got busted for cheating on folks?
Oh,
Ashley
yeah,
Martin.
yeah.
Ashley
That's
Martin,
the
is that what
first
it's
time I
called?
heard about
Ashley
it. Was
Mad-
last week.
Ashley
Ashley
Madison.
Madison.
Something
Madison,
like
is that what it was?
Madison.
Yeah.
Yeah, Ashley Madison. I think that's it. A
Oh,
website
Ivan, you're
for
just
people
saying,
to cheat.
You're just saying that. What's it called? What was that one? No, I'm just
Yeah,
joking.
wait a minute. Let me write that down. Now that they've already had their security breach, I know my information will be safe.
No. Yeah, sure.
Cool.
Yeah, that sounds like a good idea to have different topics. I like that idea. I like
Hey,
to see
Keith,
different
and,
topics on here.
Theo, I was just gonna say that it was good seeing you tonight. Also, it was good to see Lourdes, and I see some familiar names up there. I'm gonna
Yeah,
go ahead and sign off on this one, and I'm gonna go ahead and get ready for the 9:00 Eastern Standard Time DC Tech meetup. I think we have some decent names. The CEO of Blab is supposed to come in. You guys want to check that out?
Cool.
As well as
Now-
Cool.
some of the luminaries in the DC Tech space.
So, Ivan, just to let you know, I'm going to
Luminary.
be a lurker only on that one because I have
that's
some homework I have to do before I go to bed tonight, but I'm definitely going to watch it. Are
Okay,
you going to record that?
I will, absolutely.
Sweet. I'll watch it in its entirety afterwards.
Sweet. All right. Super
Awesome.
fans over here.
Thanks for getting me addicted to this,
No worries.
pal.
See Keith, see you.
Well,
Okay,
I'm going
see you.
to, all right, so we can all sign off officially now, and Ivan will start his up in 5 minutes. Theo, thank
Okay,
you for
thanks a
joining
lot.
us. Yeah, I really
Yeah,
appreciate
thanks.
your time.
Talk to you soon.
All right, you too. All right, bye. This is the Super Smart Guy signing off. I appreciate everybody attending. I'm going to have this posted on my website, www.supersmartguy.com. I'm still figuring. I think what I'll do is I'll put the full audio in my blog section, and I'm going to have highlights. I'm going to wrap up into a podcast episode. It will be published on Thursday morning, so you can get it in your daily commute. And then it'll be the Super Smart Guy podcast. And I'm available in Stitcher and iTunes, and you can come to my website, supersmartguy.com, and listen, or you can get it with any podcast player. So thanks, everyone, for tuning in. Thank you for all those loves down here, and we will see you again soon. Just keep an eye out for Super Smart Guy. We're going to have more shows in the